Hi, thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew, and it's been an eventful week so far. Yesterday, for all of us here at BQ Prime, it was a great event, the India Opportunities Summit, and we saw quite a few stellar names talk about the opportunity that the Indian market presents. You'll find all of that on the website bqprime.com, and we'll bring you updates over the course of the coming week as well. But for now, let's turn to the equity markets, and we're seeing a lot of chop and churn in a very narrow range for the benchmark, of course. And we're seeing stock-specific action once again on account of the earnings season having kicked off. So we'll bring you updates on the IT sector as well. We have Wipro results to talk about. But I want to start with a conversation on a particular stock that has led to quite a big move for the benchmark as well. Reliance Industries, even if you account for yesterday's drop, you have a counter that has gained about 7.5% in just this month. What are the factors at play, and what's the path ahead for those that are invested and those that are contemplating a fresh entry into Reliance Industries? That's going to be my focus right now. And joining me to talk about just that is Sushil Choksey, the Chief Executive Officer of Indus Equity Advisors. Thank you so much, Mr. Choksey, for taking the time. The first question, of course, I think on quite a few people's minds, especially those tuning in, is what's driving this recent run-up of just about 7.5% or so this month itself?
Good morning, Alex, and thanks for having me on the show. Basically, Reliance demerger, that is Jio Financial's book closure, which was announced for 20th of July, has led to the spike in the price because a lot of retail and institutional investors, depending on the choice, who would like to own a piece of Jio Financials. And it's also a preempt to that how will Reliance Retail and the telecom arm Jio will live overall on a long-term basis. Whether it will happen with this AGM, it may take 1 year, 12 months, 24 months, one doesn't know. All the speculation continues, but currently the run-up started out of the consolidation phase, which Reliance was hovering in last 1 year between 23 and 26, 2700 towards this new benchmark, was primarily driven by the book closure date which Reliance announced, and particularly as the markets have moved up, led by many stocks. The index at the current level, a lot of proxy is being sought by many participants in large cap. So the next 2 year, 3 year with election out, likely next year, central and state election coming, people are moving after mid cap rally also into some of the large cap, and Reliance being a proxy. But the predominant benefit came because of the demerger of Jio Financial Services.
Okay, so that kind of puts things into context. Because if I look at the outlook for the current, for the first quarter, Mr. Choksey, I think consensus is that it's not going to be a very strong quarter for this group. What are your own readings on what could be the print or the key metrics to watch out on in the first quarter?
See, Alex, when you're buying a large cap like this, barring few traders who want to trade on a monthly, daily, weekly basis, they look at this result. But if you look at a consolidated EPS, which is forecasted for FY24 and 25, so let's break up how it, oil to chemical is likely to be weak, Reliance Retail and Jio is likely to be doing well. Jio Financial is getting demerged, the valuation given to the stock with treasury stock being transferred there, plus the current net worth, add to it, it comes to anywhere between 180, 175 rupees. Now, who will give a holding company structure discount to the Reliance shares owned by them, and people who will not? And if you look at the pure net worth basis, will you price that at 2 times book or 3 times book? It depends on. So basically, let's assume that 175 to 200 is a fair value based on what the global reports are indicating. Reliance Retail, people saw that current buyback which they are doing from retail shareholders at 1362 rupees a share. But everybody looks at how Reliance Retail is going to pan out over a number of years with e-commerce, luxury, and all other kind of formats and expansion which is prevailing right now. So if all those kind of expansions have to be factored in, retail has been provided a higher PE. So people are looking, if I as a shareholder want retail separately, telecom separate, I want to be only in oil and gas, oil to chemical. So depending on the structure, you'll have to look at it. So the breakup of Reliance right now, it seems that oil to chemical is anywhere between 750 to 800 rupees, and oil to gas, which is the current KG Basin find may be a big kicker to support that entire piece because of gas supply, which is going to increase to a sizable amount. And I think commercial production was announced on 29th, 30th of June. Now, after that, if you look at retail, 1,000 to 1,200, depending which report you read to. Jio has a similar range, again, around 1,800 to 1,200, depending on how you factor in. So, sum of parts, everybody is valuing between 2,800 to 3,200 rupees a share. But the future is brighter because alternative, the new energy business led by hydrogen and solar. And keep in mind, barring two large groups, everybody is dependent on raw materials from China, whereas Reliance and the other groups are looking at polysilicon integrated because nobody in India, China controls 95% of polysilicon. So everybody is gung about solar, but there's no value integration done from basic raw material to finished products. So Reliance is looking at integrating the entire solar chain, and that would be linked to hydrogen. So people have started talking about that value. And if you take a 10-year outlook on that business is a different thing. And if you take a 1-year outlook is different. So if you break up all these sum of parts, I think at 2750 and you have a 3-year outlook, the stock makes very attractive. And people who are playing for demerger can happen in 12 months, 24 months. And the breakup will have. So if you're looking at compounding with a 3 to 5 year outlook, Reliance remains attractive. And that's the basic story. And not dependent on quarter earning. But anyway, the earning for this year would be approximately 140 rupees EPS, and profit before depreciation, interest and tax before the demerger consolidation basis was being estimated at 1,65,000 to 1,75,000 crores.
Mr. Choksey, you know what I'm going to do after this conversation is done? I'm going to cut this portion out and put it out separately so that people can listen to it, because you've answered so many questions that I did not even have to ask. So thank you so much for taking the time this morning. And I think that part of where you talked about the sum of the parts valuation, also the potential over the next 3 to 5 years, kind of answers what the various analysts are also putting out, because I see the consensus estimates pointing to a growth of or a potential of 2.8% upside from this point. But even that, there is quite a divergence, with one particular brokerage saying that there's a 17% upside from this point. So I think that will also pan out over the course of the coming weeks and months. But thanks, as always, for taking the time. Pleasure.
I'll just put in one word here.
Yeah.
The diesel exports which Reliance would have managed to Europe in this quarter may surprise a lot of people where refining margins are concerned. So I'm not saying looking at Singapore GRM, they are going to be bad, domestic consumption. But if Indian economy is going to go from current 3 trillion to 5 trillion and 10 trillion, and the outlook on domestic consumption on petrol is doing well, and if oil is stable at 75, 80, the local retailing, what happens, one doesn't know. And as inflation in India tapers off over a period, right now we are in a little inflationary led by vegetable and supply chain disruption. I think interest rates have peaked, and if consumption kicks off, all the verticals which are more a consumer play where Reliance is concerned will have a benefit, because whether it's petrochemical led by plastic or oil and gas or everything, it's a consumer connected product.
Yeah.
Similar ways telephone, and similar ways entertainment, and similar ways retail. And keep in mind, there are reports which are indicating that hydrogen solar combination can be a 10 bagger if you have a 10-year outlook. One only needs to wait and see what Reliance achieves compared to many Chinese or some big global companies. But I am quite optimistic where manufacturing is concerned, Reliance normally does well.
Absolutely. Thank you so much, Mr. Choksey, once again for taking the time. Pleasure speaking with you.
Thanks a lot, and have a good day.
You too, sir. All right, so that was Reliance Industries, and I'm quite sure that you've already found quite a few nuggets from that. As I said, I will be cutting that out and putting it out separately so that you can view it at your leisure. For now, let's turn to Wipro. And the IT major posted its numbers, remember, yesterday. I believe my colleague Tushar is joining in to give you a little perspective on that. But the headline, of course, I think, according to me, Tushar, is the fact that they have raised their guidance. What can you tell us about that?
So, good morning, Alex. The situation at Wipro is not as bad as what we had seen at the end of Q4. So, at the end of Q4, they had warned of degrowth. So, they were staring at -3 to -1% revenue growth in Q1. That has come at -1.54% in Q1, which is bang in the middle of the previous guidance they gave. Now, the guidance for -2 to +1% revenue growth for the July-September quarter. So, in a way, that's better. The other big win for them is the deal making they're seeing. Deal making for the company, the total contract value has stayed above $3 billion for about 5 quarters now. But the question to be asked here is that the deal making, the numbers that are coming in, $3 billion plus for the last 5 quarters, is not converting into revenue at the moment. And that's where the pain point is, not just for Wipro, but also for others as well. Which effectively means their project delays, their project ramp downs. The longer term deals are coming in, but the discretionary spends have gone down. Alex.
Okay, so clearly some key talking points there. A few of the IT names which are in trade yesterday saw a bit of a pop, and we'll have to see how Wipro reacts in trade on account of its earnings. Thanks so much for joining in and giving us that perspective. Let's turn to a few more stocks that you need to watch out for in trade, and there are a number of them on account of order wins that will be in focus. Rishi is joining in to tell you all about them. Rishi, morning. What are you picking up this morning?
So there are a couple of order wins to focus on. Firstly is JBM Auto. It received an order for 5,000 electric buses, and this is for state transport in 5 states, that is Gujarat, Haryana, Delhi, Telangana and Orissa. And the company has also said that it will supply some of these buses to Fortune 500 companies as well. Now, the company's promoter recently infused funds into its bus subsidiary, and now this order will further boost the company's focus to be an end-to-end electric mobility solutions provider. So then the next order win is for Avantel, which won a 4.24 crore worth of orders from Masgon for ultra-high frequency satellite communication system. And this order is expected to be executed by July 2024. Masgon has received several orders for in the recent past. So this is probably part of those orders for Masgon to complete. Then there is RVNL, which received an order of 808 crores from the National Highways Authority. And the order is for rehabilitation and upgrading the NH53 that is there in Odisha. So it also involves increasing the lanes from the current 4-lane to 8 lanes. And it is also part of, so RVNL has forayed into the road infrastructure business as well. So this is part of that as the company starts developing and focusing more and more on road infrastructure. Then there is GMR Par, which whose subsidiary won an order from the Uttar Pradesh government to install about 75 lakh smart meters. Now, these smart meters are for the Purvanchal and Dakshinanchal areas of the Uttar Pradesh. And these smart meters will be installed under the RDSS, that is the Revamped Distribution Scheme. And so under this scheme, the government plans to install about 250 million smart meters by 2025. And recently, Genus Power also got some about 27 lakh smart meters under this scheme as well. So I think there's a lot of opportunity in the smart meter space.
Certainly, and certainly something to watch out for. Thanks so much, Rishi, for that. One of the counters that Rishi mentioned, Masgon, I want to talk about it in a little more detail because all of this is coming from the Prime Minister's visit to France, where 3 additional Scorpion submarines are going to be given to India, and that is going to be executed by Masgon. Remember, this is a counter that has gained very significantly in a very, very short period of time. Saloni is joining in to give us some perspective on that. Saloni, could you help us understand? This is an additional 3. What was the original order, and what can you tell us about where the order book stood just a while back?
Right. So as you mentioned, these are 3 new Scorpion submarines that Masgon has gotten an order from the Defense Ministry. So before that, Masgon had received an order of 6 Scorpion submarines that the company has already constructed for the Indian Navy under the project P75. So out of these 6, 5 have already been launched and been delivered to the Navy post the completion of the sea trial. And the 6th submarine, that is INS Vagshir, which was launched on 20th of April last year. It is currently still undergoing sea trials, and post the completion of that, it will be delivered to the Navy. So the cost of the additional 3 submarines is still being negotiated and is yet to be announced. So other than that, the company has also had some notable wins, and they've made some really big bids recently as well. So on the 7th of June, Mazgon jointly bid for the construction and delivery of 6 submarines along with ThyssenKrupp. And this was also under the Indian submarine project P75. So India plans on spending around $5.2 billion on these 6 diesel electric submarines. So we are yet to hear back about whether Mazgon has received this order or not. Also, other than that, Mazgon has signed a contract worth rupees 2,724 odd crores with the Indian Navy for the medium refit cum life certification of the submarine INS Shankush on 30th June. So the order book of the company stood at rupees 38,755 odd crores as of 31st March, and this does not include the very recent orders that the company has received. Looking at the stock price movement that you mentioned, Alex, so the stock has risen over 66% over the last 1 month to rupees 1,713.90 as of yesterday's closing, and it has risen 117% year to date.
Well, there you have it. Thanks so much, Saloni, for bringing us that update. Mazgon Dock Shipbuilders is a stock that you should watch out for in trade today as well. Of course, the stock has gained very substantially. We'll have to see how the Q1 results come in and any guidance from the management on execution of the various orders that they have received and the timelines of completion. Remember, all of these orders, the gestation process or the gestation period is extremely large. So it's very important to bear in mind. Varsha is joining in now to tell us about a few other stocks that we need to watch out for in trade. Varsha, what are you picking up? Morning.
So, good morning, Alex. So, ICICI recently had come up with a report on PCPL, that is Phillips Carbon Black Limited, formerly known as Phillips Carbon Black Limited. So, PCPL has recently came up with the results for Q1, and so before getting into what the results are, what PCBL does is, so company is a major producer of carbon black, which is used in reinforcing filler in rubber compounds like tire and other performance materials. Now, coming back to results. So first of all, ICICI maintains buy with target price of rupees 200. Revenues dipped 4.4%, driven by lower realizations, while EBITDA was up 7.8% on high base. Carbon black volumes rose 12.5% year on year. Now, the triggers for this company is strong overseas market opportunities playing out, plus companies that anticipate strong volume growth over the next few years due to Europe and US looking to source more carbon black volumes from China and India due to muted capacity addition in Russia, Europe, and US. Also, company is working on developing superconductive grade carbon black, which finds application in EV batteries. And recently, if you see a few days back, PCBL stock risen due to company commissioning the first phase of its planned 40,000 MTPA specialty chemical expansion at its Mudra plant in Gujarat. Now, the next company that we have is Kajaria Ceramics. ICICI again maintains buy with a target price of rupees 1,680 with upside potential of 27%. Now, the key triggers for this company is the management has guided 13 to 15% of volume growth in the tile segment in FY24, led by healthy capacity utilizations, then expected rise in demand from tier 2 and below cities, plus strong brand recall. The other trigger is the lower gas prices will improve margins and will eventually lead to earnings growth, and this is why management has given guided the margin guidance given by management is almost 14 to 16% in FY24. Also, this strong earnings growth and healthy dividend payout ratio will lead to improved return ratios. Also, the key risk for this company is slower than expected demand, plus any sharp volatility in gas prices.
All right, thanks so much for that, Varsha. The counters that she's mentioned, Kajaria Ceramic in particular, you want to watch out for in trade today. We've got a few more to tell you about, and in fact, we've got Himansh joining in to round off the list for the day. Himansh, morning.
Good morning,
What do you have for us today?
Right. So I'll start off with Ahluwalia Contracts. It has recently received a project worth 200 crores from Indian Financial Technology and Allied Services for structural and related external development works for their enterprise computing and cyber security training institute at Bhubaneswar, Odisha. And it's set to be executed in the coming 20 months. The stock, as of date, is up 30.5% YTD. Then moving on to Polo Queen International in Industrial and FinTech, the company approved the raising of up to 2,500 crores for its proposed agro processing project and data center project at 2 locations within Maharashtra. It will also raise the amount through equity shares or other instruments through one or more preferential or issue or private placement basis or rights issue or QIP on any combination thereof. And lastly, we have Deep Industries. The stock has been making quite the headlines for some time now. The company inked a joint venture agreement with Eurogas Systems SRL for supplying oil field equipment bids and also engaging in these projects. Eurogas acquired 26% stake in the onshore drilling services, the JV company, and the balance 74% is held by Deep Industries itself. The management of the joint venture will be appointed by Deep Industries in the coming time, and the stock of Deep Industries touched a 52-week high yesterday, as there were reports of it receiving a big order from ONGC for roughly around 130 crores. With about integrated mud services and amongst other, equipment services.
Right, Himash.
Yeah.
In fact, Rishi had spoken about that yesterday, and we'd marked it. Thank you so much for joining in.
Thank you so much.
All right, so a few more stocks that you want to watch out for. We've got Angel One on account of its quarterly updates, as well as TTK Prestige and Patanjali Foods. There's an update on the OFS. We've got Mihika joining in to tell you all about that. Mihika, what do you have for us?
Good morning. So Indian stockbroker firm Angel One has come out with its Q1 updates for the current financial year. Revenue decreased 2.4% quarter on quarter at 630 crores, and the profit after tax stood at 220 crores, which is at 6.9% decrease on a quarter on quarter basis. On the contrary, positive side, the average daily turnover was at 22.7 lakh crores, which is a 23% quarter on quarter growth. Their total client base was at 151 crores, which is a 9.3% quarter on quarter and a 44.7% year-on-year growth. Their India Demat account share stands at 12.5%, which is a 46 quarter-on-quarter basis point improvement. Q1 NSE active client base share stood at 14.3%, and the total NSE active clients are now at 0.44 crores, which is a 9.6% year-on-year growth. There's also been an update on the TTK Healthcare delisting. The exit floor price has been revised to 1,202.30 rupees, which is a 14.26 premium to its previous floor price of 1,051.31 rupees and a 9.16% discount to yesterday's closing price. The delisting will be a result of certain promoters acquiring around 36 lakh equity shares from the public shareholders. This amount represents 25.44% of the total issue equity share capital of TTK Healthcare. The total promoter group holding, including the acquirer, stands at 74.56% currently, and the promoters have also deposited nearly 432 crores in escrow as a total consideration for the 30 lakh equity shares. The company lost 18.40 rupees or 1.39% yesterday in the BSE. And finally, Patanjali Foods has announced that the company will cancel its green shoe option of their ongoing offer of sale, which started yesterday and ends today. The company will not exercise their oversubscription option for an initial 2% stake sale. So thus the ongoing offer will be the base offer size of 7% of the total paid up equity share capital, and the fixed offer for sale floor price is set at rupees 1,000.
All right, thanks so much, Mika, for that update. There you have it. We've got quite a few stocks that we've already told you about, and we had an interesting chat right at the top of the show on Reliance Industries, which will continue to be in focus all the way up to the record date of the demerger and listing of its Jio Financial Services arm. We're heading into trade in just a few minutes. All of that live action and more you'll find on the website bqprime.com, so do stay tuned.